Welcome to the weekend edition of the Fear and Greed Business Headlines, the week that was, a wrap of the biggest stories over the past 7 days. I'm Sean Aylmer. It was a week of tech stock crashes, house price booms, and lots of government and corporate action. Let's start with markets. It was the week that marked 1 year since the ASX became a bear market. During that year, tech stocks have done best, followed by the big three miners, spurred on by higher iron ore prices, and in more recent months, the banks. The worst performers have been the travel and tourism stocks. Notwithstanding they got a bit of a kick along this week, the energy stocks haven't done very well either, and some of the real estate investment trusts have performed poorly. The turnaround in the fortunes of some of the favourite stocks last year, like Woolworths and Coles, has been quick and in share price terms, painful. But the worst performing big stocks over the past 12 months have been Toll Road Group, Transurban and Telstra. The tech stocks may have done best over the past year, but it's been a bit of a bloodbath over the past couple of months. We aren't talking a tech crash, but for some companies, it's been pretty scary. Locally, the All Tech Index is down around 17% over the past month. Market leader, Buy Now Pay Later Group Afterpay, has fallen 1/3 during the past 4 weeks. Xero is off 17% since late last year. Same thing is happening overseas. The Nasdaq 100 is off 10% from its most recent peak. Apple is down 15% over the past month. That's more than $300 billion in value. Microsoft is down 6% over the same period. Facebook, Amazon, Netflix, they've all fallen sharply from their most recent peaks. Vehicle manufacturer Tesla is down around 1/3 over the past 7 weeks. Oil prices pushed beyond $70 a barrel in the middle of this week. Production cuts by OPEC countries triggered the jump. Other commodities have risen on the back of the strong economic outlook. Copper led the way, while iron ore prices remain high. Bitcoin headed towards yet another high, trading above $55,000 a unit. Gold fell, then recovered, and then dropped back down again, while the Aussie dollar had a pretty steady week around the 77 US cent mark. Overseas, it was a week in which the Biden administration passed the second largest spending package ever, $1.9 trillion to kickstart the world's biggest economy. The American Rescue Plan Act was signed by the president overnight and includes an expansion in healthcare, a plan to slash child poverty rates, and millions of Americans will soon receive payments of $1,400. That helped fuel Wall Street, and the S&P 500 during the week touched a new record high. There was a major global hacking incident. State-based criminals, probably out of China, may have hacked into Microsoft's email platform. Businesses and households were told to take action to avert disaster. And there was some great voyeurism this week, and it had nothing to do with Meghan and Harry. Bloomberg worked out that Tesla head Elon Musk lost $27 billion last week as the vehicle manufacturer's share price tumbled. Elon's okay though, he still has about $160 billion in the bank. And Warren Buffett's fortune passed $100 billion for the first time after his Berkshire Hathaway Group's share price hit a new high. In the world of economics, consumer confidence figures from Westpac and the Melbourne Institute showed that households are happy, really happy. Confidence is back at record highs of December last year. So too businesses, according to the National Australia Bank. Business conditions are at record highs, spurring on confidence. It's incredible that after a recession and the worst pandemic in 100 years, consumer and business confidence is so buoyant. Just shows what ultra-low interest rates and big spending packages from governments can do. The vaccine rollout around the world continues. 1 year after the World Health Organization described COVID-19 as a pandemic, some countries, the United States, the United Kingdom and Israel, for example, have done a great job getting inoculations to citizens. Around 320 million people globally have received jabs so far. By contrast, the local numbers look ordinary. About 125,000 Australians have received a vaccine, and only 0.4% of the population is inoculated. Throughout the week, the government was assuring us that the rollout would be complete by the end of October, but that timeline seems to be slipping and might even have been pushed back to next year. Prime Minister Scott Morrison had his time in the geopolitical sun this week after President Joe Biden called on him and the Prime Ministers of India and Japan to hold a quadrilateral security dialogue, whatever that is, this weekend. The topic of conversation, China. Beijing didn't like the idea of the Four Nations meeting and said Washington was deliberately creating friction. In local politics, Victorian Premier Daniel Andrews isn't in great shape after slipping on stairs in his home, breaking ribs and damaging vertebrae. He's likely to be out of action for weeks and possibly months. And Federal Health Minister Greg Hunt was admitted to hospital with cellulitis. The federal government already has Attorney General Christian Porter and Defence Minister Linda Reynolds on sick leave. Question is whether all these absentees might delay legislation passing. I'm getting a bit weary of talking about the housing market. CoreLogic data this week shows that Sydney house prices hit a new record, with the median price just a touch under $1 million. Canberra, Brisbane and Hobart are already at record highs. Melbourne is a laggard. The market is flying, enough for Reserve Bank Governor Philip Lowe to warn that he had plenty in the toolkit, apart from interest rates, to slow the market if necessary, and that would mean more regulation. The head of Australia's intelligence network, ASIO, said that up to 9 countries were trying to steal or cultivate sensitive research and technology from Australian universities and scientists. Pretty incredible story, really. Universities need money and look overseas for support, notably from China. But with that comes a big risk in terms of intellectual property. As always, there was plenty of corporate news around this week. There were rumours that Treasury Wine Estates and waste and recycling company Bingo were about to receive takeover offers. Insurer IAG suspended trading in its shares as a fallout from the collapse of trade finance group Greensill spread. IAG shares fell 10%, but then recovered when the group said it didn't have any net exposures to the failed group. The board of Australia's fourth largest telco, Vocus, recommended a $3.5 billion bid from Macquarie Infrastructure and Real Assets and Aware Super. The group includes brands Commander, iPrimus and Dodo. AMP sold its AMP Capital Global Equities Funds management business to Canada's Fiera Capital. But the biggest corporate yarn was about Energy Australia deciding it will close its Yallourn coal power station in Victoria 4 years early in 2028. The plant provides 1/5 of the state's power, and its closure highlights the dire predicament that low energy prices, which are at 6-year lows, and strong competition from renewables has left generators in. AGL Energy's Liddell Power Plant in New South Wales is due to close in 2023. Coal-fired power electricity still provides around 2/3 of all generation in the national electricity market. But the sector is at a tipping point. In fact, the Energy Security Board said the remaining power stations could be forced to close earlier than expected because of low wholesale prices and cheaper renewables. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest news story of the week was the federal government's relief deal for the tourism industry. While the $1.2 billion package was heavily criticised for not being enough and favouring Queensland, what I thought made it worthy of the biggest story of the week was that the government has shown its hand and will help out ailing industries in coming months. And they want to do it in a way that isn't just via handouts, but stimulates demand as well, and hopefully has knock-on effects. The centrepiece of the package was agreement to pay 50% of 800,000 airfares to regional areas of the country hit hardest by the lack of international tourists. That's great for the airlines and for the regions nominated. It comes ahead of the end of JobKeeper, which has been keeping many tourism businesses afloat. It shows that the government is looking at doing more for ailing sectors, think hospitality, think education, and it wants the rest of the economy to carry some of the load. The other big part of the package was expanding the loan guarantee for small businesses. In fact, business really doesn't have to be small anymore. Companies with up to $250 million in revenue can access loans of up to $5 million for 10-year terms. All sounds good, but a version of this scheme has been running for months now, and only $2 billion of the $40 billion allocated has been accessed. The sleeper story of the week involved the big Australian, BHP. Its new boss, Mike Henry, said he wanted to bring about 30,000 contractors onto staff. So rather than having a workforce which included 40% full-time employees, it would be 80%. This is a very contrarian view in the world of human resources. Big companies for decades have been shifting staff onto contracts. There were plenty of reasons for that, greater flexibility on managing staff numbers, fewer so-called on-costs such as annual leave, sick leave and insurance, and the gig economy has supercharged the trend. The biggest hotel chain in the world, Airbnb, has very few employees. Same with the biggest taxi company, Uber, and most of the delivery services. But Mr. Henry reckons employees, rather than contractors, will help BHP improve productivity. People will care just a little bit more. It's a cracking story which hasn't got much attention. The most remarkable story came from the Australian newspaper. Only 6 of the 246 giant A380s available are currently flying the globe. The planes were hailed as the future of flying when the first commercial flight took off in 2005. But the 800-seat planes were too big and not economic enough. The Airbus aircraft struggled to compete with smaller, more efficient planes like the Boeing Dreamliner. And then COVID-19 hit. A raft of airlines are decommissioning or reducing the number of A380s they fly, including Qantas. It comes as Boeing 747s are being retired around the world. It's a remarkable demise for big aircraft around the globe. Special mention in this category goes to Jetstar. Its boss Gareth Evans said the airline was back to flying 90% of its pre-pandemic routes. That's pretty remarkable. My favourite story this week came from the Caravan Industry Association of Australia and Accountants BDO. Now, I don't put those two together too often. During December and January, national holiday park revenue was up 18% on a year earlier. And heading into the Easter holidays, normally the busiest weekend for holiday parks, forward bookings are up more than 300% from the COVID-hit 2020. It's good news, and that's why it's my favourite story of the week. And that's everything you need to know from the last week. Hope you enjoyed it. I'm Sean Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.